Facebook is not doing it. Neither is Twitter, Zynga, or Groupon. Not one of these highly valued tech companies is going public this year. Yesterday, I sat down with an investor and tech executive who has plenty of experience leading both private and public companies. Kevin Ryan was the CEO of DoubleClick. He was an angel investor to the Ladders and Hot Jobs. He's currently the founder and CEO of Gilt Groupe. I asked him about the difference between leading a private firm and a public one.
Right now, there are a lot of reasons you want to be private. And I took DoubleClick public in 1988. I was the CEO of a public company for 7 years, so I've been on both sides of this.
Is it just the hassle?
You know, there's a couple different issues. One is that valuations in 98 were much higher in the public markets than the private markets. The second thing is that you couldn't get any liquidity at the time unless you went public.
Which has very much changed.
Very much changed. So now you can get liquidity, employees can get liquidity in a variety of forms now, which wasn't available at the time. Two, the hassles and costs of being public have definitely gone up. It's worse than it was in 1998. So those 3 points combined have made most companies stay private for almost as long as they can, whereas before we all went public as soon as we could.
Well, I want to pick up on that because, as you mentioned, you're the CEO of DoubleClick, and you are probably one of the only tech CEOs to have not only survived the tech bubble in the last one, but you also thrived. Do you see a bubble forming now?
There is no question in my mind that there is no bubble right now. And I'll tell you the difference. Now, a bubble, my definition of bubble is when prices sometimes across many companies are 10 times what they should be. Bubble's different than maybe a market being slightly overvalued, which can happen at any time. So at the time, many companies were worth $1 billion or 10 billion that ended up being worth 10% of that. That's not happening right now. The reason Groupon is worth 6 billion or 10 billion is because they're going to do probably 3 to 4 billion in revenue this year and profitable. So is that a bubble? I don't think so. What do you expect that to be worth? Maybe it's 50% overpriced, maybe, but I'm not sure that it is. But it's certainly not worth 1/10 of that.
How much competition is out there right now for VC money, and does VC have too much money?
In the internet space, the funds are doing extremely well. More value is possibly being created right now in the last couple of years than the real value that was created in the late 90s. So funds are doing well. As always, many, if not most of their investments won't make money, but the ones that do make money are doing really, really well. You
have mentioned that you're going to be raising some money. Is this the year that you're going to do it?
We're definitely not going public this year. I think for example, we haven't had a single meeting internally to even discuss the concept of going public. So that tells you where we are. I'd say the earliest that we would go public, and we would consider it, would be the second half of next year, which would be 2012. Or 2013.
And may I ask you why? Because we just went over all the advantages of being private. I mean, is it because maybe you need to make foreign acquisitions and a stock listing is a more safe brand for overseas companies to do business with?
Two things. One, it is advantageous for making acquisitions, and I think at that time there may be an opportunity for us to really be aggressive on the acquisition front, both internationally and domestically. Because as you know, there are a lot of companies in this space all over the world. They're not going to get liquidity, and so there'll be an opportunity for us to do that. Secondly, I think at that point, the PR benefit could outweigh some of the cost disadvantages of being public. So if we were public and we're by far the largest internet company in New York City, you just get an additional coverage and people care about it. The 100,000 brokers on Wall Street would be thinking about it, would be thinking about should they become a member of Gilt, should their wife become a member of Gilt, when maybe they hadn't thought about it in the past.
DoubleClick, Gilt, the Ladders, Hot Jobs, obviously you've had a hand in so many successful businesses. What is the next big thing?
So in my case, I'm only focused really on Gilt. So for the first time in the last 5 years, I'm not starting any new companies. And because I feel like this is one of the biggest opportunities, in fact, the biggest opportunity I'll probably ever be involved with is Gilt. It's already bigger than DoubleClick from a revenue point of view, and we're only 3 years in, and DoubleClick is now 15 years old. So I'm pretty excited there. I do think you're seeing across the board new business models, new technology, fundamental changes that are really exciting. So I think it's good news for all entrepreneurs.
Gilt Groupe was valued around $500 million a year and a half ago. I couldn't pin Kevin Ryan down for a more up-to-date figure, but he did say it was significantly higher.